An honest economist would tell you that importing goods can cost a nation much in terms of job loss and related tax revenue losses. The economic cost of imports can be offset by the economic gain of exports if our exports are about the same as our imports. But with a massive trade deficit, there is a massive economic cost to the nation that can lead to depression and bankruptcy of companies. To protect the economic well-being of both workers and investors in a nation, every nation must impose a quota on imports to prevent a depression-generating trade deficit, and must also charge import taxes on low-wage imports to protect workers and investors in businesses. Evil, lawless free trade is not only offshoring American jobs, but it is also offshoring American technology, income from production, and future market share. In the short term, it hurts workers with joblessness, homelessness, and death. Loss of worker income leads to loss of consumer spending and then economic depression, which will destroy businesses in America. In the long term, the offshoring of technology, income, and market share means the bankruptcy of American companies and a new stock market crash that will see the rich in America lose their wealth. American companies that offshore their technology, income, and market share will go bankrupt and will be replaced by foreign companies with that offshore technology, income, and market share. CEOs with golden parachutes are trading short-term company profits for long-term bankruptcy of the company, but they do not care if the company goes bankrupt because the short-term rise in stock prices has given them income to retire on. Rather than company decisions being made by what is best for the income of the CEO, company decisions should be made based upon what is best for workers and stockholders. Likewise, rather than national economic decisions like trade levels and tariffs being decided by bribe money from those who profit from the bankrupting of America, national economic decisions must be made by a direct democracy vote of the people themselves. When too much power is in the hands of CEOs and executives, they use that power to promote their own wealth at the expense of workers and investors. A national economic board, elected by the people, must oversee companies and the economy. They must prevent cookbooks and stock price manipulation, which make executives richer but workers and investors poorer. Laws must restrict company executives to selling only 10% of their holdings each year so they cannot profit from a cookbook bubble and bail out before bankruptcy hits. To better protect the long-term needs of workers and investors, some board members should be elected by the workers and small share investors. To prevent a powerful few from exploiting others, there must be a balance of power in corporations. Also, the National Economic Board, elected by the people, must look out for the national interest of good-paying jobs for all American citizens, long-term economic growth of companies, and long-term prosperity for the nation. America must move to economic democracy, not just so workers will not be jobless, homeless, and dead, but also so the rich will not lose their wealth through the offshoring of technology, income, and market share.